It's a risk-off warning in the charts for small caps, gold miners, in the energy sector as bonds and the dollar head higher. Stay tuned for Sunday night charts. We take a look at the charts to help you with the trading week ahead. I'm your host, Steven Van Metre, and thanks for joining me this Sunday evening. The moving average, the colors on your screen, 21 days in red, 50 days in green, 100 days in blue, 200 days in tan. Price is a general direction. Prices are headed. Momentum is a rate of change. A bullish indicator for both is positive, and a bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is a level buyers can't break, and support is a level sellers can't break, or resistance is where sellers are at, and support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of a trade, help with time in trade, and provide direction to the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Let's get right into the S&P 500, where I think we could see a bounce in the large caps as the rest of the market is warning of a deeper sell-off. And here you can see the percentage of S&P 500 stocks above their 50-day moving average, bouncing off what is in this one-year chart a -2 standard deviation move. Look for buyers to come in here and try to push this price higher. We'll take a look at the charts in a moment. Looking at the percentage of S&P 500 stocks above their 200-day moving average on the one-year chart, you see a -3 standard deviation event. Look for that to be bought as well. And let's get into the price and momentum signals. We see price going bearish on the 21-day moving average, now dipping below its 50-day moving average, although I don't think that is the complete end of the story. I do, based on the breadth charts we just looked at, see a bounce coming. 1 month momentum turns negative as prices are falling below where it was a month ago. Let's take a look at the SPY, the S&P 500. Why do I think this thing goes higher? Because it's bouncing off this level of price support. And here we've got the volume profile turned on. You can turn that on in your charts. We're looking at the 6-month window, and you can see there's a bit of volume here already. Price came down, hit that. We mentioned last week that was where support was at. Look for that to be bought as breadth is weakening. People love it. Traders love to buy a downturn in breadth. So look for that to possibly large caps to go up. As far as support, it's all the way, deep here in the 440s on SPY. So plenty of support heading below that. Let's take a look at the NASDAQ, which is a slightly different picture in my opinion. Now we look at the percentage of NASDAQ 100 stocks above their 50-day moving average. Looks to me can come down a little lower as we see a -2 standard deviation move just below on the one-year chart here. Let's go and look at the percentage of NASDAQ 100 stocks above their 200-day moving average, and it's sitting just below a -2 standard deviation. That level has been bought before, but it could slide a little further. I'm not as confident as I think the S&P bounces, and I'm not sure the NASDAQ does. Here, let's take a look. We see price flipping bearish on the 21-day moving average. Everything else looking the same for the NASDAQ. Let's zip over to the charts and see what we can see is that it tagged its 50-day moving average and held. But notice that the volume, the price where you see volume headed to is below, or so where the price is now, where the volume is at, suggests the price heads lower and retests into here. You can look at support at this 382 kind of zone in here to 378 to the downside. There's a lot of support at the 6-month volume profile line at 367. So I expect the S&P to try to bounce, but the NASDAQ to struggle here without a second retest of all this volume that's just sitting below there. All right, let's move on to the small caps, which are flagging a warning sign as we head over here now to the S&P 600 small cap index. The percentage of S&P 600 stocks above their 50-day moving average is at a -2 standard deviation event. I would suspect that this will be bought as well, or attempt to, because the sell-off in this has been huge. But there's an overall broader warning that we're going to look at. Here you can see the percentage of S&P 600 stocks above their 200-day moving average on the one-year chart, flagging a -2 standard deviation. Again, I look for this to be bought. The question is, does it hold? And now, you remember, when you start seeing red across all of these signals, that's where you start to look for buying points. And now, price going bearish, momentum already bearish, so momentum leading price lower, below all the key moving averages as it was last week. 1, 3, 6, and 9 month momentum is negative, meaning it's below its price from 1, 3, 6, and 9 months ago. Let's take a look at the charts, and I'll show you what concerns me about the small caps is it's sitting right below this range that, I told you was a topping pattern before. It broke higher. Everyone said, you're wrong. Obviously, it came back down. And now notice on this 2-year chart, see where that red bar is? That is where the most shares have been traded, suggesting that everything above that, the sellers have been dominating into this trade. Looking at the 1-year chart, you see it's below that. What is the concern is that small caps head a little bit lower. If they break this bottom line at 2.0, we'll just say 208, the top is in, and well, what does that mean? The small caps are likely then to head back down to 164 on IWM. There's your risk off move. Look at the 6-month chart. You see that overhead volume acting as now resistance to the upside. So while I think there could be a bounce in small caps, the overall risk here is it's saying that if this breaks to the downside, there goes the rest of the market. Because remember, small caps lead the large caps. All right, let's take a look at IYT. The transportation sector tends to lead broad equities lower if you follow the Dow transportation theory or Dow theory on that. 21-day moving average price now flipping bearish along with the rest of them, dipping below its 50-day moving average. 1 and 6 month momentum turning lower, the 6 month being a key signal for a lot of momentum trading programs. Let's take a look at IYT. We're going to zoom out a little bit. And on the 1-year chart, you notice there's plenty of support below. So even if price comes back down, it's got plenty of support on the 1-year chart. You know, it's tagging the bottom side of its 50-day moving average, which is acting as resistance, kind of suggesting that this thing is probably going to make a move lower. Even though we've seen buyers certainly come in here, the moving average is acting as a bit of resistance. Let's look at the 6-month chart, and you see there's plenty of support below. Let's go to the 90-day, and there's support below. 30-day resistance above, and 10-day resistance above. So I kind of leaning that this maybe retest down a little bit, maybe another run at the 200-day moving average. You could flip a coin on this one. I've gotten no strong opinion either way. Let's look at the energy sector. It tends to also be a leader of the broad equity market. Momentum and price unchanged. Still below all the moving averages up to the move 50-day. 1 month momentum went from negative and falling to positive and rising. So we see a little bit of momentum shift there. Let's take a look at crude and look at the energy sector. So crude's got overhead resistance now at 70 as it ran up there and got rejected. Support for crude is at 62, and expect that if it gets down there again, you'll notice it's sitting right at the bottom of its 1-year support. So on the downside, it's got 1 year. You see most of the shares traded at 65. Over the last 6 months, you see most of the selling at 70. So this is tightly bound. And let's take a look at the energy sector. The broad energy sector, XLE, see a nice little rounding top, suggesting that the downside risk is greater than the upside risk based on what you see here in the charts, as everything above, say, mid 55 on XLE is just continually being sold, is running into resistance on the upside move of the 50-day moving average, the 21 days curving and kind of starting to guide lower. So, even if there is a pop in crude and energy stocks, it looks to be, we'll use a Fed's term, transitory on that. So potential risk off on the energy sector, saying things are guiding lower. How about the financials? Not much change here. It dipped below the 100-day moving average. Remember, the banks have been buying a ton of their stocks back now that they're allowed to do that again. And what do we see? The price went back to the same point over the last 6 months where, guess who's been buying their stock back? The banks, right? This is support, is where the banks are buying their shares. So nothing really to see here other than, the bottom of this comes out at 36. The only question, of course, at that point is, do the banks stop buying their shares back? It appears that there would be plenty of support here to hold that up. You'll notice on the 1-year chart is sitting right at support. The 6-month chart sitting right at support. 90-day chart is sitting right at support. So there you go. Banks buying their stocks back. All right, let's continue on to the industrials. we see price on the 21-day moving average trend turning lower, 100-day moving average turning lower, still below all the key moving averages, below the 100-day moving average. 1, 3, and 6-month momentum breaking lower. That is not a good sign. So let's take a look at the industrials. Where are you? There you are. And that does not look very good, because it tells you, based on the volume profile, that's now acting as resistance again, that everything above 103.15 is where the sellers are at. Buyers are closer to down here at 99. So this tells you the industrials are more likely to head lower and retest into where those buyers are at. If they can't hold, well, down it goes. All right, let's move on to what do we have? The utility sector going green. All of a sudden, 1 week, this thing goes above all its key moving averages. The 50-day moving average, price and momentum go bullish. So let's take a look, because utilities tend to be a risk-off sector, kind of the last one, flight to safety, and then it goes with everything else. And what do we see? Everything is fighting that volume profile line, the 6-month line. What looked like a bull flag broke higher, got rejected, and then ran into some resistance at the volume profile line and then broke through. So buyers are clearly here at 66.80. So look for utilities to go higher. They've got to break through 68 to get into the next zone of where sellers are at. But as of right now, you should still look at this trend. It's still a bullish trend. It's just a fighting bullish trend. So, but there again, look at that 1 year volume price support held. So clearly the buyers are in here at the 1 year and 6 month mark, wanting to take utility higher as we see some risk off tone to the market. How about gold miners? Well, look at this. Momentum remains bullish, but price, on the other hand, is still some bearish, below now all the key moving averages. 1, 3, 6, and 9 month momentum. 1, 3, and 9 month momentum turning negative. This is a major risk off look. And let's take a look at gold miners, because when this thing breaks, it is a proxy for broad liquidity. Tells you there's problems. Here's the 6 month volume profile acting as overhead resistance. Every time price gets up here, it gets sold. It gets sold repeatedly. Zoom out to maybe the 2 year chart. There, you see a beautiful 2 year chart. This is clearly a topping pattern. This was a bear trap as the bulls came in and brought it up. Look at this on the 2 year chart. You want to know why it sold there? We talked about this. This is where all the sellers were at the last 2 years. It got sold at 34, 36. And now the risk is this keeps going down. It breaks below this $28 price range. And there's just nothing left to hold this up. And that is a major risk off signal. And you're seeing it in the gold mine stocks. So there's a big warning there for the rest of the equity market, because gold miners tend to lead things lower along with crude oil. And with that, emerging markets goes completely red. And this is one of those things, when you start seeing a lot of red, you starting to look for buying opportunities, because when we go all red, well, we know what happens is eventually this thing turns. Let's take a look at EEM and see, because emerging markets is leading gold lower. And you can see for emerging markets, 2 year support is sitting at 44.31. Price is continuing to weaken, so would suggest that it's going to first find some buyers around 46 and then deep into 44.31. Looking at the 6 month volume profile, what do you see? That's overhead resistance. How about 90 days? Overhead resistance. How about 30 days? Overhead resistance. EEM's leading gold miners lower, and that is risk off. But until it gets to even the 1 year chart, wow, until we get to 44, if it breaks 44, then you get into this line of doom starts to show up. So risk off in EEM as well. Let's continue to the bond market. High yield bonds flagging risk off. Price and momentum still bearish. They're now ticked above their 90-day moving average, almost irrelevant. 12-month momentum is now negative and falling. High yield bonds also lead the broad equity market lower. They are an early warning signal. There it is, high yield bonds. 6 month volume profile, absolutely resistance above, found sellers. How about the 1 year? Resistance, found sellers. You know who was selling high junk bonds? Yeah, corporations selling their junk bonds and retail investors buying them up like crazy. 2 year overhead resistance. Look, this thing is trying to hold right there at 85.41. The moving averages are guiding lower. If this thing gets down here below, we'll say this 84.17, you've got a little bit of support and this risk off. I mean, junk bonds are telling you They're telling you exactly what you need to know. Let's move on to the long bond. As we know, of course, the Bond King loves duration. TLT, price, momentum, all bullish across the board, above all the key moving averages. 1 through 9 month momentum, positive and rising. 12 months still negative and rising. So all good signs there for the long bond, telling you there is a risk off pulse going on. Look at that move on Friday. 6-month volume profile was support. I told you these things. I told you buyers were below here. It's acting as support, setting price up. Where's the 1-year bar? It moved up. Again, that's telling you, you remember the 1-year bar was way down here. When everyone said this was just the beginning of more selling, the 1-year bar was here. You see it won't be long before price is above where it was a year ago. So bullish pulse for TLT. Look at the 2-year. You know, you start to zoom out and you see where all the buyers are at. 2-year chart, 1-year chart, 6-month chart. Where do you think TLT is headed? Higher. Where's the next zone of selling? You'll see some resistance as it moves into this 157. I don't think that holds too much. The major zone is up here between 162 and 166 with a sweet spot right in the middle at 164. There's your next supply zone as this looks to move higher. Again, risk off, flagging in TLT. And let's take a look at gold futures. Momentum flipping bullish now, above the 9-day moving average. 1 and 3 month momentum going negative. 6-month momentum negative and rising. Let's see how bad gold looks from the chart perspective. And yeah, there you go. 6-month volume profile line. Resistance. How about the 1-year? Resistance at the same spot at 1800. It's telling you. I mean, this is where sellers are at. 2-year chart. Guess where the sellers are at? 1800. They're telling you exactly where they're at. And if gold breaks below the 1750 again, then it's going to look at 1678 or 87. Let's see. 87. Break that. And it's over. The party is over. Gold is already telling you that this is a, you know some people say, this is just a big, bull flag. Well, if this continues to break down, it's not. It's a big sell-off is what it is. And that would make sense based on what we're seeing in other parts, especially the dollar, as we'll get to that momentarily. How about silver? Now, still below all the key moving averages. All the momentum signals are negative, below where it was, 1, 3, 6, 9, 12 months ago. Silver looking to be in trouble as well. I know a lot of people are bullish on silver, but look at the volume profile line. It's telling you the last 6 months, all the sellers are at, say, right here at 24. How about the 1-year bar? Oh, all the sellers are at 26. Has stood no chance. How about over the last 2 years? All the buyers are down here at 18. So where do you think support is for silver? 18. Where do you think buyers are headed? Or price is headed? 18. How do we know? Because up here at 24 to almost 25, this was a buy zone. And now those buyers have turned into sellers because they realize price is turning. Silver has got a little bit of hold here at 22, but once it goes, it's headed down to 18. That's where its next destination is. And we head over to the last but not least, the dollar is almost all bullish, price bullish, momentum bullish, remains below its 9-day moving average, above where it was 1, 3, 6, 9, 12 months ago. That is indeed bullish. Let's take a look at DXY here, and then we'll look at UUP. So the dollar sitting right below, got up to 97, got rejected, got in the supply zone, came down, held around its 21-day moving average, is looking to make another run at 97. So the zone of 97 up in here between, we'll just say, 96.50 and 97.50 is a sell zone. Didn't take much for it to get rejected there, but look for the dollar to move back into that zone. Now, and then from there, you're up to 100. That's massively risk off. If you want to know what a bottoming pattern looks like, it's very clear. This is what it is, and it broke higher and is looking to continue to move higher. Let's take a look at UUP, and here we are on the 2-year chart. Notice where all the volume support is at. 25.28 is telling you all over the last 2 years, most of the buying was at 25.28. Validates this is a bottoming pattern. Dollar to go higher. Looking at the 1-year chart. Oh, it's about this a little bit lower in the 24s. How about the 6-month chart? Below. How about the 90-day chart? Below. Let's keep going. Should we go to the 30-day chart? Below. 10-day chart? Below. is telling you dollar's headed higher. Let's risk off, my friends. See you back on Monday for the show. I'm Steve Van Metre. Thanks for watching. The content of this video is private educational information only. It's not intended to provide investment advice. It shows not to be construed as recognition or solicitation of buyer selling security, financial instrument, or participate in any particular trading strategy. This video was prepared by Steve Van Metre on personal capacity. Please express this video that I do not reflect the value of Financial Advice Inc. or Steve Van Metre Financial.